Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting on the daily time frame with the bullish scenario where we have a multi 1-2 and we look for continuation to the upside. In this scenario, we are working on this white wave 4. Now the common target area for this white wave 4 here is between the 0.236 and the 0.5 Fibonacci, taken from the low of Y2 to the high of your white wave 3, giving you a target between 92k and 83.3k, with the invalidation being the 0.618 at 79.4k. However, generally, a wave 4 of a higher degree likes to retrace to the wave 4 of a lower degree, which is this range here, as inside this wave 3, we then count a wave 1, 2, 3, 4, 5, making this a lower degree wave 4 compared to the white wave 4 that we are looking for. The price action of this lower degree wave 4 is between 93.5k and 86.6k, which therefore is your general target area, and you can see that the 236 and the 382 are nicely positioned inside this area. Now you also see a vertical line on my chart, and the vertical line is a Fib time taken from the start to the end of wave 2 to the end of your wave 3, comparing wave 2 in time with wave 4 in time. Now it is most common for a wave 4 to be longer in time compared to a wave 2. If we zoom in, then you can see that this low here is made before the 1 Fib time. So preferably when we think about a wave 4, we enjoy seeing a bit of a bigger sideways structure ending on top of or after the 1-to-1 Fib time, which is positioned on tomorrow, Thursday, the 28th of November. The minimum time target for a wave 4 is the 0.382, and if I put this one on my chart, then you can see that the low over here was made after the 0.382 Fib time. So the minimum time target is reached and the minimum price target is reached. It's just that from a probability standpoint, you would like to see a bit of a bigger wave 4 compared to your wave 2. So that is something we have to be aware of. Now after the white wave 4, we then look for a wave 5 to the upside to finish the blue wave 3, and then have another bigger wave 4 in blue, and then one more push to the upside for the blue wave 5 to then end the bull market and look for a bigger retracement. The most bearish scenario is a finished impulsive structure where we first had our big sideways range and then count a 1, 2, 3, 4 and then a wave 5. Important here is that there is no overlap between a wave 1 and a wave 4 that would invalidate an impulse to the upside, but as you can see, it's not the case. Wave 4 just missed out on overlapping wave 1. What does lower the probabilities, however, is that your wave 5 is the extended wave, which is rare and also carries the highest amount of volume, which is, if wave 5 is extended, it is something you like to see. You want wave 5 to have the highest amount of volume, but a wave 5 being extended is rare, and it is by far most common to have an extended wave 3 with the highest amount of volume and then have a normal wave 5, so not an extended wave 5. If we then go to the 1 hour time frame, then the first scenario here on my chart is a zigzag to the downside, which would extend wave 4 in time, right? So that's something we keep in mind. So here we then have a wave 1, 2, 3, 4, and then finishing a wave 5 with a 5-wave structure to the downside on the lower time frames. And then after wave A, we're looking for a 3-wave structure to the upside in B and one more move down in a wave C, where we do want C to take out the low of your wave A. Now the common target for your wave B is between the 786 and the 05, 95.2k, 97.9k, taken from the high to the low of your wave A, but a minimum target is 94.1k and a maximum would be 98.8k. These are a little bit less common. Now your wave B can be any shape, can be any corrective structure, it can be multiple zigzag structures, it can be a flat structure, it can even be a triangle. time will tell, right? But in this case, you're looking for a bit of a bigger bounce. The other scenario on the 1 hour time frame is a double zigzag. So we have an ABC to the downside in a wave W, then we have our wave X, and we look for another ABC to the downside in a wave Y. And after wave Y, we then look for price to move to the upside and take out the all-time high. Now in this case, you can see that wave X is very shallow. So you can see the 0.382 Fibonacci here on my chart, which is taken from the start to the end of wave W. A common target for a wave X in a double zigzag would be the 382 to the golden pocket. Now it does happen that a wave X in a double zigzag is so shallow it doesn't even touch the 0.382. So the fact we didn't hit the 382 is definitely not an invalidation. It also happened once before, now that my memory hits me here, where price did not in a double zigzag structure hit the 0.382, and that was during the retracement over here. We had a similar moment where we didn't touch that Fibonacci, but we did move down in a double zigzag. So therefore, it is important to at least be aware wave X can be short, can be very shallow, and in this scenario, you just basically look for price to move to the downside impulsively, and the invalidation is very clear. If price is going to move up and hit 94.8K, this scenario is invalidated, keeping it simple, right? Now the target for your wave C here and your wave Y would be 87.5K, 85.7K, which also is in confluence with one of these support boxes that I have to the downside here, sitting between 86.9 and 87.4K. So that is actually quite nice. It does then have to pass this support area here between 89.4K and 90K. The support that we hit over here at the moment is the value area high of this range. Here we touched it exactly, moved up, then we basically swinged the previous low and we moved up again. So a little bit of support here, but then the next level is the point of control, and then the value area value area low here, this one here at 87K, as you can see. Now, if price does move up and take out this high to invalidate a WXY, then the bullish scenario becomes a finished corrective structure, right? And it doesn't really matter how you count this structure. What matters most is that this move to the upside here has to be a multi 1-2, which I'll show you in a second here on the 50-minute time frame. And you would expect a very impulsive move to the upside, basically a straight line. The moment you do not get this, the probabilities are automatically lower for a finished corrective structure and continuation up, and they increase for a zigzag A, B, and then a wave C. Now let me explain this going to the 15-minute time frame. So here on the 15-minute time frame, right, if this is a significant low and we move towards the upside, right, continuation of the bull market, let's say, then at the bare minimum, you want to have one of three impulsive structures: an impulse, a diagonal, or a multi 1-2 with high confidence, right, high probabilities. Now this move to the upside, however, cannot be counted as an impulse because we have overlap here. And overlap, 1, 2, 3, 4, 5, right? You're not allowed to have overlap in an impulsive structure, so that doesn't work, right? Alternatively, we have to think about a diagonal. But if this is wave 4, if this would be a diagonal structure here, if this is wave 4, then your wave 4 is longer than your wave 2 in price, which means you have to think about an expanding diagonal because it's not allowed in a contracting diagonal. So then you only can consider an expanding diagonal. But in an expanding diagonal, you want your wave 5 to be longer than your wave 3. But that is not the case. Take a trend-based fib from the low of 2 to the high of 3 to the low of 4, and then drag it to the right here, and you can see 5 is shorter than 3. That's not allowed. So a diagonal doesn't work, which then leaves us with a multi 1-2, which is the most bullish scenario, which is why I said that if you do move up and take out this high, the only way you really want to take out that high and be very bullish is if you take it with a lot of volume and pretty much a straight line, because in a multi 1-2, you're looking for 1-2, 1-2, right? Potentially still another 1-2, but then you're going to get your wave 3. and your wave 3 should be very explosive, high amount of volume to the upside. Now the invalidation for this scenario is over here, taking out this low at about 92.3k, because if we consider a multi 1-2, 1-2, 1-2, then we can count another one here, then you can count some sort of a flat maybe in here, ABC, and then continue to the upside. So that would mean taking out this low would invalidate a multi 1-2. Taking out this one here should at least make you aware of the possibility, because the bearish scenario is a WXY, W, X, and then a wave Y, which is a corrective structure after which you want to take out the low. So that is basically the two structures that are competing with one another. It's the multi 1-2 versus the WXY, and it's for most people more easy to look at impulsive structures compared to corrective structures. And impulsive structures, well, we can't count diagonal, we can't count an impulse, only a multi 1-2. But if price takes out this low, we got to be aware, take out this low, invalidated. Looking at the CVD divergences, you can see that price moved up from support with consistent bullish CVD divergences. All the check marks here are bullish CVDs that played out as price moved to the upside, right? So many opportunities here. Now that price is moving down, you can see two question marks. So there's again a bit of bullish CVD. However, we did broke the structure and we have a bit of volume moving down. So what I would like to see preferably in this case, right, these were great opportunities as price was moving up from support. But now preferably on the right side of the most recent high, I like to again see bullish market structure and then see some new fresh bullish CVDs coming in as well. Make sure to be aware of potential bearish CVDs coming in on the lower time frame as well. Now then, if we have a look at the news, then we had some news yesterday, but also today, 27th of November, 2:30 p.m. Central European Time. You can see we have some high impact news. So make sure you trade safe. Might be very volatile. I'll make sure to be live on YouTube at that time. And if we then look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for the bullish scenario compared to the bearish one. So here we go. We are looking for wave 4 and then a continuation of the bull market. So in other words, bullish, right? We're looking for price to move up on the higher time frame. On the 1 hour time frame, the probabilities are at the moment slightly in favor of an ABC compared to the WXY, but slightly in favor, right? Because as long as the WXY is not invalidated by taking out this high here, which preferably does happen in a wave B, you consider the WXY still, right? Especially when I explained the local price action and how a multi 1-2 can be invalidated. So just be aware here. Now, if price would take out, as I say here, 94.8k, we can also consider more bullish options with a finished corrective structure, but then you need a multi 1-2 here and a big move to the upside, right? A direct move, pretty much straight to all-time highs. At the moment, probabilities are highest for a continuation of this range on the 1 hour time frame, which on the daily is labeled as a wave 4. On the 15-minute time frame, the low time frame over here, taking out 92.3k, right? And the probability significantly increased that this is a corrective structure, WXY double zigzag. And taking out 93.1k, which I think just happened here on the 15-minute time frame, should at least, or not yet here on the chart. But if you do take out that low here, it at least should make you aware of the potential of a bearish scenario in a WXY. But the more hard invalidation, more conservative invalidation is taking out this low here at 92.3k. So hopefully you found this update valuable and helpful. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.